Good afternoon, everyone, and thank you for joining us for today's webinar titled Gearing Up for Round 2, the Paycheck Protection Program for the Self-Employed. I'm Andrea Terry, the Director of Learning for the MSBA, and I'd like to thank the MSBA Tax Section and the attorneys from Frost and Associates for coordinating this program. Today's returning presenters are Rebecca Shepard and Peter Hakubo of Frost and Associates. If you have questions during the presentation, please email them to crisel@msba.org, the email address that you see at the bottom of your screen. Faculty will do their best to get to answer as many of them as possible this afternoon. So again, thank you for joining us, and I'll turn the program over now to Rebecca and Peter.
Hi, thanks for the introduction. And we just want to apologize in advance, and we'll kind of get to this reasoning in a little bit, but our firm has filed a class action lawsuit against the SBA, and Peter and I were on a call until after midnight last night regarding that. And so the slides, some of them have page numbers, some of them don't. Some of them could probably use some work. So the full slide, the full deck is going to be available next week after our marketing people kind of go through and make sure that everything is correct. But for now, just kind of bear with us while we're going through this. We'll take questions as we go. So if anything's unclear, certainly we encourage any questions. So just to kind of give you a little bit of background about what Peter and I do when we're not in the midst of a global pandemic where the government is issuing trillions of dollars of loan relief for small businesses. We're both tax controversy attorneys, meaning that anytime somebody has an issue with tax liability, whether it's an audit, like a liability that has not been assessed yet, or if somebody has had issues that have been assessed, for payroll tax liabilities, income tax liabilities, things like that, we work with our clients to get them into compliance, get into a collection alternative with the IRS. In some cases, we make sure that we help our clients avoid any kind of criminal prosecution and items like that for our tax controversy clients, and helping businesses make the best tax choices for them. And Peter's going to get into that a little bit, kind of deciding what's the best tax treatment for your business. Throughout this presentation, we're going to discuss, the difference between an S Corp employee and somebody who has a sole proprietor. You can have the exact same business and just elect different tax treatment. And under these guidance and these rules under the SBA, you're actually going to be treated differently as far as how much you can borrow, how much you can forgive, what types of items you can do as far as what you're eligible for. So it's really important when you're deciding how you're going to be taxed and what kind of business entity you're forming to think about this. The only other thing I'll mention is that if you're a new sole proprietor and you started in January of 2020, I encourage you to give me a call after the presentation. Just want to talk to you about some items we feel are still, I guess, squishy under the SBA guidance. So we can now officially start the presentation. So this is our website. If you have any questions regarding the COVID-19 and all of the legislation that's coming out via the CARES Act or anything like that, please feel free to go to that website. And so I know some people have joined us from last week also. So we're going to do a little bit of a recap for some people who were not involved last week. So the Economic Injury Disaster Loan at this point has no funds in it. And so SBA cut off that portion of borrowing. However, any moment now, President Trump is going to be signing a new act that generates another $10 billion to this program. So if you've not submitted an application for an EIDL as of yet, which is, again, the Economic Injury Disaster Loan, and that's directly through the SBA, you don't go through your bank, fill out the application. There is a $10,000, up to a $10,000 grant available, but it's $1,000 per employee up to $10,000. So a lot of people thought they were going to get a $10,000 check. And then we're upset when if it's like a realtor or somebody who has a business with only one employee and they're only going to get $1,000. So an EIDL grant provides eligibility to include tribal businesses, cooperatives, ESOPs with fewer than 500 employees, or any individual operating as sole proprietor or an independent contractor during the period between January 31st, 2020 to December 31st, 2020. Private nonprofits are also eligible. EIDLs provide eligible businesses no more than $2 million in loans, and they require the SBA so the SBA waives personal guarantees on the EIDL loans below $200,000. That's a typical requirement under the SBA that they're doing this during this pandemic that they're waiving. The requirement is that an applicant needs to have been in business for 1 year prior to the disaster. You go to the next slide. They'll approve loans based on applicant's credit score. There is an emergency grant that allows an eligible entity to receive a grant of not more than $10,000. But like I said, previously, that's for $1,000 per employee up to $10,000. Go to the next slide. And then just one other item about the EIDL that needs to be remembered is you need to show that your business has gone down because of the disaster. You can't have a failing business and request for an EIDL because you were already failing prior to the disaster. So it's important to kind of pay attention to these little differences in the different types of relief that are offered. And that I will give it over to Peter to do the recap.
And I guess just two other quick things with the EIDL. It mostly plays nice with PPP, but it will reduce some of the forgiveness amount to the extent you receive the grant. So the other important thing to keep in mind with PPP and with EIDL is that you can refinance an EIDL loan with your PPP loan. So where under EIDL you could get I think it's 3 3/4% loan for up to 30 years, you can refinance it down to 1% rate in your PPP. That does bring your term down to 2 years though, but something to keep in mind. So like Rebecca said, we did this, I guess on the 14th. So we'll just, high level recap and go through, some of the considerations with respect to employer businesses. So the big thing to keep in mind is that the way the SBA rolled this out was in two times. So there was one opportunity to get involved and to make the application on April the 3rd. That was for employers, businesses with employees. And then again on April 10th, that for self-employed independent contractors. And we'll talk through some of the differences there. Bill, if you want to advance it. So there are some ineligible entities that you can't make the application. You're engaged in an activity that's illegal. Household employers are not eligible. If you have a situation where an owner, more than 20%, is incarcerated on parole within 5 years, that they're not eligible. And that all tracks back to existing SBA regulations before the pandemic. And of course, if you ever defaulted on a loan with the SBA before within the last 7 years, you wouldn't be eligible. Bill, can you go ahead? All right, so big picture for employers, what is my loan amount? Well, it's the lesser of $10 million or the average total monthly payroll multiplied by 2.5 times. So 250% of your average monthly payroll. We'll get into going forward exactly what is a payroll cost so that you can know how much you can apply for. Again, we talked about it earlier. It's a 1% loan and it is deferred for the first 6 months. Repayment would occur between month 7 and month 24. Bill, go ahead. You go ahead. So this is important. Payroll cost defined, and this is certainly applicable to the employers who could have applied on April the 3rd. It is also applicable to self-employed individuals who have employees themselves. And so what is included, it is salary, wage, commission, or similar compensation, payments of cash, tip, or equivalent, vacation, medical, and sick leave, allowances for dismissal or separation, payments required for the provision of health care, including insurance premiums, also includes retirement benefits that are paid by an employer, and includes state and local taxes assessed on the compensation, basically state unemployment tax. It does not include independent contractor pay, commissions. Yeah, thanks, Bill. So there's some things that we have to back out of that definition now. And the big one is in any amount over $100,000 annualized. And so they're going to throttle back salaries to $100,000. The second one here, taxes imposed or withheld under chapters 21, 22, 24 of the IRC, that is referring to it's referring to FICA taxes. In effect, what is happening here is they're not giving you credit as an employer for your portion of FICA. You are still permitted to take into account taxes which are withheld from an employee's pay under 24, which is employee withholding, and then 21, which is the employee's portion of FICA. Chapter 22 deals with railroad retirement, railroad benefits, largely, not too globally relevant here, but and another very important one is compensation of an employee whose principal place of residence is outside of the United States. And then these last two is basically just making sure you're not in a situation where you're able to double dip. So if you've received a benefit under 7001 or 7003, that's not going to be included. Bill, go ahead. All right, so the calculation here for employees figuring out payroll cost is the aggregate amount of payroll costs from the last 12 months. You throttle it down to $100,000 for anybody who is paid an annualized rate more than that. You're dividing that amount by 12 to get a monthly average, and then multiplying by 2.5. As we said earlier, you can refinance the EIDL loan, so that you would then add that to your amount, but then reduce any advance that you receive. So up to that $10,000 advance. So quickly, loan terms, it's not a personal guarantee, no collateral is required, and the interest rate again is 1%, 100 basis points. Bill, go ahead. Rebecca, is this you?
I believe so. Yes.
Yep.
Exciting. So again, you can be a small business, and so a lot of law firms are set up as limited liability companies. If you take an S Corp election, which is Form 2553, I know most people know that off the top of their head, but it's pretty exciting stuff. And you choose to become an S corporation, you are now an employee of your own business. You employ yourself. You get a wage. You're supposed to take a reasonable salary. You're actually required to take a reasonable salary. And there are other pros and cons, and Peter and I would be happy to talk about any of those things, how to set up your business properly, and the best way to kind of avoid tax is the wrong word, to pay less payroll tax than you would otherwise. We're happy to do that anytime. But for this specific purpose, if you're your own employee, you get to have different, you got to apply on a different date, and you get, the calculations are different for how you calculate retirement and health insurance and all those kinds of things. If you are a limited liability company and you did not make that special election, you didn't fill out that form, then you default and file as a Schedule C on your 1040 income tax return, on your personal income tax return. Otherwise, it's it flows through on an 1120S and comes through as your payroll income, and then the company income is on a K1. So these are for people. So the new guidance is for people who file on a Schedule C, the sole proprietors or the LLCs who default to a sole proprietor. That's what this is for. So if you were in operation on February 15th of 2020, you're an individual self-employment income. So a lot of times S corporations are like, well, I have self-employment income. Like, this is not for you. That's not what they mean. They mean as somebody who's filed on that Schedule C. So your principal place of residence is the United States, and you filed or will file a Form 1040 Schedule C for 2019. Go to the next slide. If you are in a partnership, you may not also apply for a self-employed PPP loan. So a lot of people had questions about this after our last presentation. What do you do if you're a partner in a law firm? And we didn't know the answer, but now we do, because they issued guidance. I don't know if we mentioned this before, but my office is in Annapolis and I live in Baltimore. And by the time I got to Baltimore after our presentation a week ago, guidance was issued. So that was fantastic stuff. So now, if you're in a partnership, you have to file together. You file one application as a partnership. So there are some law firms, obviously, that have hundreds of partners and thousands of partners, and that is one PPP loan application. I guess thousands wouldn't work in this instance. So your income of a general active partner may be reported as a payroll cost up to $100,000 annualized, same as discussed earlier on your PPP loan application filed on behalf of the partnership. Partnerships are eligible for loans under the Act, but limited to one application. And it's to try to get as many eligible borrowers as possible to get the loan so it doesn't like logjam the system. Okay, my supervisor is chatting me during my presentation, which is fantastic news. Thank you, Eli. But to let us know that the president signed the bill. So there's new funding now. So pretty exciting stuff. I guess we will allow him to make that interruption. New guidance. So calculating your self-employment PPP loan. You find your 2019 IRS Form 1040 Schedule C. Can you use your 2018? No, has to be 2019. The IRS issued guidance earlier during this whole pandemic that you could file your tax return in July. You can still file it in July, but if you want a PPP loan, you need to file a 2019 1040 Schedule C with your application. Otherwise, you will not be accepted. So
I just want to say one. I don't think you actually have to have it filed.
No, I mean file with your application. I'm sorry. Yeah. You don't have to file your return, but you have to have it prepared. So make sure that you're ready to do that. A lot of our clients typically wait to the last second, so they need to get their act together and get this ready. So look on your Schedule C, line 31, that's your net profit amount. If this amount is over $100,000, you reduce it to $100,000. A lot of Schedule C businesses, I'm sure lawyers don't necessarily do this, but you may have clients where they don't have any income because they had a lot of expenses or they depreciated a lot of equipment, or who knows how it happened, but their net income is zero, even though they took distributions throughout the year. If that's the case, you are not eligible for a PPP loan. You need to have a net profit. It does not matter what your gross receipts are. It does not matter what your distributions are. You need to have a profit on line 31. You can go to the next slide. So you calculate the average monthly net profit, divide it by 12. Next, sorry, thank you. I don't know why there's so many slides for this one calculation. Multiply that by 2.5. You add in the EIDL money that Peter talked about before, and then less of any grant that you got. So if you still have an outstanding EIDL loan, you add it on top, you're essentially refinancing that loan, and you're subtracting out any amount that you've already received. So that's your loan amount if you do not have employees. Now, if you are self-employed on your Schedule C and you have employees, then it goes back to what Peter said before. As far as your payroll, you add in all of your payroll, your average monthly payroll for 2019, you divide by 12, multiply by 2.5, add that number to your number. And you're allowed to add back, go back. So you're allowed to add back employer health insurance contributions and retirement amounts to your employees, but not for yourself as an owner. So that's another part of the lawsuit that Peter will get into, is why we feel like that's unfair and like discriminatory in nature, that one person who sets up their business one way can have health insurance and retirement calculated in their loan amount, and a different way they do not. Now you can go to the next one, Bill. Sorry about that. So I think we can kind of move through these. So it's the same as what he had said previously. So at least 75% of your PPP must be used for payroll costs. This is really important, and it's a calculation that you can work with. And we'll kind of get into some best practices later, but think about things that you can do. You have people as 1099s that maybe are really employees. And by the way, that's something that we also know a thing or two about. So we're happy to help you there. And so maybe this is the time where you actually you properly classify your employee as a W-2, change it over, and you can up your payroll cost that way, rather than the way you had it before, to make sure you get to that 75%. And then, again, for the forgiveness, how you want to work it out that way. But at this point, I'm going to hand it back over to Peter.
Sure. Bill, you can advance it. Yeah, thanks. So, these in the first instance are loans. So, everybody here should be interested in, well, what do I need to do to have it forgiven and essentially turn it into a grant? And that goes to what Rebecca's talking about, in making sure that you pay at least 75% in payroll cost. You can use the additional 25%, stated differently, up to 25% for other eligible costs, which would include things like mortgage interest, rent, and utilities. And the employee benefits, of course, are part of payroll cost. Go ahead. Yeah, thanks. So there's two big ones that are flushed out in a couple of these next slides. So the first one is making sure that you maintain your full-time equivalent employees. And full-time equivalent employee calculation is, what do you consider full-time for your business? In most instances in Maryland, it's going to be 40 hours. And then what did each employee actually work? So you need to figure out first your full-time equivalent employee count from the period of February 15th, 2019 to June 30th, 2019. And you're going to be comparing your FTE count during that period to your FTE count during the 8-week period following the origination of the loan. If you were not in business in 2019, you can also use the period from January 1, 2020 to February 29th, 2020. And actually, it's not a if you were in business versus not in business. In this situation, the CARES Act actually allows you to use your discretion. So whichever one is more beneficial to you, you would use as your look back. But either way, you're comparing it to the 8-week period beginning at the loan origination, when the funds are dispersed to you. And to the extent that it is less, you are reduced by that same percentage how much you can receive in forgiveness. Bill, I don't really know where the slides are, truthfully. Let's see, reduction. Okay, so that's based on a reduction of employees. The other one, Bill, maybe go to the next one, I think. So I will mention this, that there's a reference here at the bottom that says safe harbor. There is language in the CARES Act that says if you rehire, if you get your FTEs back up by June 30th of 2020, the language, it seems like it is a safe harbor. It basically says that if you get it up by June 30th, we won't consider the period from February 15th of 2020 through 30 days after signing the bill, so April the 26th. The language, it seems like it's trying to say it's a safe harbor. It's not clear that it is. I think that's one area that we're still waiting for guidance. I think SBA definitely needs to come out with additional guidance on the forgiveness aspect, but there may be a safe harbor here that would change the way that full-time count works. But at this point, reading the text, it's a compare, either a 2019 period or the first 2 months of 2020 to your 8-week period. Bill, do you want to go to the next one? There is an additional opportunity to have your forgiveness reduced because you reduced your employees' wages by more than 25%. And the reduction then is any amount that is beyond the 25%. So in effect, you can reduce employee wages by 25%, but you can't go over it. And the look back period for the reduction in wages would be the last full calendar quarter that an employee worked for you. And then you would compare it to the 8-week period following the loan origination. The certain employees are not considered in this calculation. So it's any employee who during any pay period in calendar year 2019 earned a wage at a rate that annualized would be $100,000. So again, it's making a policy distinction about over and under $100,000. Again, the possible safe harbor that is included in the CARES Act seems to suggest that it would work against this as well, that if you return your employees' wages to what they were during the look back period, that may operate as a safe harbor. Again, this is something we're keeping an eye on, and we think that the SBA needs to clarify for sure.
We do think that would be within the spirit, though, of the law, which is the idea is to protect people's pay and protect people's jobs. So it would make sense if you bring people back and you up their salary that it should count towards your loan forgiveness. It's just not as crystal clear as we'd like it.
Mm-hmm. Yeah.
I can jump in if you want.
Yeah, go for it.
So just one thing to think about, and not everyone's going to do this, obviously. It's just a best practice. Anytime you're going to possibly be audited somewhere, it's a good idea to clean that account, or by clean, I mean have it be specifically for that purpose and not for anything else. So it's just easier for you if you do get audited in the future and you're sure on your calculation. Here, it's the math is really going to matter. It's really me and Peter's time to shine when the people who can do the math and the formulas get to be heroes. And so you want to make sure that you're doing everything appropriate. I know he mentioned that employer portion of your payroll tax is not forgivable. And so I would say have your your payroll come out of the bank account and then reimburse that bank account, the employer portion, just so you have a clear trail and you know exactly for yourself when you're submitting your forgiveness application, you've done everything possible to get as much forgiven as possible. And then, you know, down the line, if you are audited, it's something that you can show, and it would just make your life a lot easier. Obviously, for a law firm with one employee, this is not going to be as difficult to maintain as someone, you know, we have clients that have 300 employees, and that is going to be a lot more complicated when you're talking about, you know, a construction company where there's a lot of things going in and out of their operating account, a lot of money going back and forth for things, to make sure that they're properly calculating everything, especially adding back the proper taxes. So I'll hop back out.
And I think the issue here is that they haven't issued guidance on the forgiveness. We're starting to understand what documents banks are required to look at in order to determine loan amount, but we haven't seen exactly what needs to come out for forgiveness. Bill, you want to advance it? And Rebecca, I think this is you.
I don't think we had gotten to that part of who was doing this part, but that's okay. I will take it. Sounds good. Loan forgiveness.
We're good.
New guidance. Payroll costs, including $100,000 of salary per employee. So for 8 weeks, it's you take $100,000, you divide it by 52, and you multiply it by 8, and that's $15,385 per individual. One thing to keep in mind is if you are a sole proprietor and you didn't max out on your $100,000, we don't see any reason why you can't during this period and have it forgiven. Nothing's been issued as of yet, so that's something to think about. Now, again, we are talking about sole proprietors, and covered benefits are not permitted in this calculation. So you're not allowed to add back your healthcare expenses, your retirement contributions, and state taxes. And Peter will get into this when you're talking about the lawsuit as far as like why that's unfair, because your loan amount's going to be different, but your forgiveness amount's going to be different too. Go to the next slide. Owner compensation replacement calculated based on 2019 net profit with forgiveness, but excluding any qualified sick leave equivalent. So there are certain other credits that you're permitted to do. And if you have compensation replacement through those other provisions, even if it's not through the PPP or the CARES Act, you can't double dip essentially, which I think makes sense. Go to the next slide. So we are in hot debate about whether or not rent and other expenses can be forgiven on somebody with a Schedule C. The guidance really is unclear here. On one page, it says you can take it as a forgiveness step, and on the next page, they say self-employed people can take 8 weeks of 52 weeks of compensation, and that's the max because a lot of these people work out of their homes, which we know is not to be true, especially people have law firms, they have rent, they have utilities, they have these expenses that should be included. And so we had to change the slide today because our opinion on the matter changed. I still say it's not very clear, but it's something to keep looking out for, and that's something that we're hoping to have clarified today, frankly. So again, like we stated before, you need to have a Schedule C 2019 prepared. You don't have to file a tax return. You don't have to submit your full 1040. There's no income limitation here. If you make a lot of money doing something else, there's nothing that says that you cannot file for a PPP for your Schedule C. That's not a limitation. And then if you have employees, you need to include your Form 941s. For those who don't have employees, 941 is your payroll records. So when you issue wages, it's where your FICA taxes are captured and your federal income tax withholding. Next slide. Okay, it's Peter's turn.
So before I get into that, just to explain a little bit of the debate that we're having within our office, especially in the context of the class action suit. There is language in the regulations which suggest that a self-employed person would be limited to basically 8 50-seconds of their net income. So even though they could apply for 2.5 times of their net monthly income or net business income, they could only get forgiven the equivalent of 2 months of it. And so you have that additional 0.5, 2 weeks, whatever, that you could never possibly be forgiven of. And so there's definitely language in the SBA regulations that could be read that way. There is also language in the regulations that suggests that it is only an attempt to limit the owner pay amount to 8 50-seconds and still allow for additional expenses such as rent, interest payments, and utilities. What's clear though is that a Schedule C owner will never be permitted expenses for their health care or for their retirement. So bringing it back to the class action lawsuit, I don't know if we have any slides, Bill. Yeah, okay, I guess we got. So right now we filed a lawsuit against the Department of Treasury and Small Business Administration, as well as the administrator and Treasury Secretary, on behalf of 2 named plaintiffs so far. I believe we will be adding to the named plaintiffs soon. We're basically alleging that there have been at least three forms of, well, and I should say that the plaintiffs are minority-owned and women-owned businesses, and the discrimination really is
the lead plaintiffs, but we have other engagement agreements with non-minority, non-women-owned businesses. So if you are like that doesn't prohibit you from joining the class.
Correct. Yeah. So I think there's really 3 types of discrimination that we're cued in on at this point. The first one, and especially as to the 2 named plaintiffs, is discrimination in the timing here. As we said at the very beginning, there was an opportunity for someone to apply, employers to apply on April the 3rd. Whereas independent contractors and self-employed are left with applying on April the 10th. As you know, the money ran out on April 15th or 16th. And really, even though they could have applied theoretically on April the 10th, guidance wasn't even issued, as Rebecca said, until after, what was that, April 14th. So really limited them in their ability to participate. And I think what we're saying, as far as, SBA knew that the overwhelming majority of businesses in America are non-employee businesses, and of those businesses, a very large majority are minority-owned and women-owned. And despite knowing that, they still structured this program to work in this way. This bifurcation is not part of the CARES Act. This has been rolled out by the SBA and Treasury. There are additional forms of discrimination, as we've alluded to along the way, both in loan amount and in the forgiveness amount. Some examples of the discrimination related to loan amount would be an ability for an employer to use numbers and amounts of payroll that are either based on calendar year 2019 or based on a rolling 12 months. what is clear from the regulations related to self-employed is that you must use your net business income from 2019. So even if you had something going on that increased your income, during the first couple months of 2020, you cannot consider that for your loan amount. In addition to that, issues where self-employed are not permitted to consider their retirement contributions or their healthcare cost, even if it is paid by the business, is totally different than a similarly situated owner of an S corp, for example. On the forgiveness side, what we were just talking about with the 850 seconds and how does that work exactly? Totally different, again, from someone who is self-employed and someone who is an S corp owner. So that is a brief summary of our class action suit. We have requested a temporary restraining order, requesting that the government issue additional guidelines here. And at this point, we have a hearing later this afternoon, evening, to start on the case.
One other just real quick point on the TRO. In addition to guidance, we're also looking for them to change the calculation that the similarly situated businesses, if I have a widget company and I'm a default Schedule C, I shouldn't be treated differently than if I filled out a form and elected S corp status. It shouldn't make my loan amount different. It shouldn't make my forgiveness amount different. And so we want those to be, that calculation to be changed. So we have some examples of the difference of treatment that we don't have on slides, so we apologize about that. But essentially, it can be a lot of money. Now, it's if you make over $100,000, say you make $120,000, and you've got $10,000 of health and $10,000 of retirement. You're talking about an additional $20,000 a year in expenses that you can claim. So your loan amount goes up by $4,166, and that amount also can be forgiven. So it's an important point to note that the exact same business that has the same income, it really does matter. Now, $4,000 isn't $4 million, but to each person, $4,000 is a lot of money when you're talking about an 8-week period. You're talking about whether or not a business can stay open or not. And I think Peter touched on this, but just to kind of drive the point home, the reason we're saying minority-owned and women-owned businesses is because overall, there's statistics that say a disproportionate number of businesses are set up in the way of a sole proprietorship for minorities and women-owned businesses, and more corporations, as far as like S corporations or C corporations, are set up by men that are non-minorities. So the idea is that this is impacting. So I had people ask me the question, they're not lawyers, so it's a little bit different. They don't understand like strict scrutiny versus rational basis. But ask me questions like, well, I didn't get my money, but I don't think it's because I'm a woman. And that's not what we're saying. What we're saying is that this impacts women and impacts minorities more because there just happens to be more of those classes in our sole proprietor, self-employed group. That's just the way it worked out to be. Whether, who know, I'm sure there's a lot of reasons why men choose to be corporations and women and minorities don't choose to be. But it does seem like by having these different sets of rules and knowing that women and minorities are going to be more impacted, there's discrimination there.
So we have a lot of questions. I think we should
Start moving.
Slides.
Okay. Do you want to just go back and forth? How do you want to do it?
Let's see. Let's start.
You want me to read them to you and you can answer them? Does that sound fun?
No, I don't want to have fun. All right. Yeah. If you want to get started, I'm
sure. So the first question is, CPAs have told me that when PPP loans are forgiven, it will not be considered income to the business. That is correct. I think none of these loan programs are considered income to your business. So it's relief and not looked at as income that you have to capture somewhere. The next question, are LLC member K1 distributions eligible for PPP loans? So no. So part of the tax treatment that people typically choose S Corps over sole proprietors is that you can reduce your payroll tax obligations by choosing to be an S corporation, reducing your salary and taking some of your income as a K1 income. So you're required to take a reasonable salary, but you're not required to take all of your income as salary. Some of the income can be profits. So there's plenty of businesses that set up that make $100,000 a year. They take a $50,000 a year salary and they take $50,000 on a K1. The only item you're able to include in your PPP loan is going to be your W-2, your salary. You're not, the K1 income is not subject to self-employment tax and therefore does not count. And that's one of the reasons why like companies that like landlords and things like that, if you have a Schedule E, you're not able to qualify for a PPP because you've got K1 income that's not subject to self-employment tax. So
the only distinction is, and there's a slide on this, my kid's walkie-talkie is going off. If this LLC here, and I can't tell from the question, hasn't elected S Corp treatment and is taxed as a partnership, a multiple member partnership, that pass-through income is eligible for PPP, but not at the partner level, so at the partnership level.
Okay, next one. We'll have Peter do this one. I saw much of your video from April 14th. Thanks for coming back. We applied through our bank, Zion's Bank, and did not get money for the first round of PPP. We are now hearing lots of problems our bank is going through, and they may not be the best option to get the PPP loan from. I'm wondering if we should apply to multiple banks to increase our chances of getting PPP the second round. What do you think is the right approach, Peter?
Yeah, so what is clear is you can't have multiple PPP loans. You get one. But I don't see anything that says that you can't make multiple applications. You just can't settle multiple loans. We have seen estimates that this new round of funding could be gone within 48 to 72 hours. So whatever you think is going to give you the greatest opportunity to actually conclude the loan, I would say go for it.
Just be careful. If you're going to SBA on one of your loan applications, withdraw from your other lenders, I would say. Make sure that you go through that process so that way you don't have multiple active loans, if that makes sense.
Now, the only thing I'll say is that a lot of the banks from the start have said, we're only going to work with people who we have an existing relationship with. It seems over the last couple of weeks that some banks have loosened that restriction. They also have opened up some of the fintech firms to be able to do this lending as well. So we've seen a PayPal get involved, QuickBooks has gotten involved. So there's more options than more options out there.
Sorry, just one more thing I would say. So practical advice, I would say call your bank and see how many applications are in the queue. Where are you in that process? If they've got 5,000 in the queue and you're going to be 7, you're in a good spot. you're going to be 4,522, then I think you need to shop it around. Find out what their percentage of processing the loans were, how many applications they got processed, see what you can find out with the information that you have. Unfortunately, what we're reading is that the program is going to tap out based on what's in the queue or close to it. It's going to be really tight. I know that, and we didn't mention this, so I apologize. The new legislation does have a pocket of money for community banks. So if your bank is a community bank, those are people I would talk to, or if you have a community bank or you have a relationship, maybe they're not your bank, but you refer them business, like there is nothing in the legislation that forces the banks to go first in, first out. They take preferential treatment all the time. That's why these huge companies, I'm sure everyone's seen in the news, like Ruth Chris and Shake Shack and Harvard and all these companies that probably don't need the relief that you all need and that other companies need, are getting millions of dollars in these grants. I sincerely doubt that Ruth Chris happened to be number one in the application process, but they're going to, the bank is going to make a lot of money off that loan. So reasonably speaking, that's kind of how the banks are cherry picking these applications, especially bigger banks. If you go to a community bank, you might be in a better spot. And if you refer them business or you work with them in other avenues, you can certainly try to see if they would submit your application today. Like I would tell everyone on this call that if you don't have an application in, it's time to get it in, like as soon as possible. Figure out your 2019 Schedule C and apply, because we don't know if Congress is going to issue more funds. There are people on both sides of the aisle saying different things.
Right. So per the actual CARES Act, this remains open until June 30th, but the funding that's out there is not going to be around until June 30th. I will say one thing: the first interim final regulations does reference the need to do a first come first serve, but it doesn't necessarily.
Fire.
We don't. Anecdotally, we're not hearing that's happening, and certainly some of the results that we've seen suggest that it's not.
Yeah, anecdotally, I know somebody who sat in a parking lot in a bank and was like, "This is my application. You must process it now." And that person also refers the business some money and has a decent account, and they were funded before a lot of other people. Anecdotally, I'm sure the bank did a first in, first out, but like someone's waiting for you in the parking lot. Not telling you to do that, but I'm just saying sometimes you want to be aggressive. Mm-hmm. So that answers your question. Next question is, I am self-employed and received my loan proceeds on April 14th. Congratulations, which is a total of $20,832. Is it correct that I cannot pay myself more than an annualized salary of $100,000 during the 8-week period? Also, what happens if I earned income from my practice during the 8-week period? So, also hot debate in our office this morning. Actually, we were talking about it at 12:27 or something today, like right before the presentation started. So we are clear that only $100,000 of compensation can be forgiven, but we are unclear whether or not you can pay yourself more than $100,000 during the 8-week period and have it count towards your PPP. So payroll costs count. We just are not sure whether or not you can pay yourself more than $100,000 in that period. Again, there's different strategies to employ. If you've got people that are working for you and you want to increase their hours, give them a project to do, whatever you need to do to kind of up that income or up that wage, you can do that. That's totally allowed. You can have more of an FTE, I guess, is what I'm saying, than what you had previously. I have clients that have hired family members, which as long as that family member is actually performing a job and that job doesn't disappear in 8 weeks, I'm okay with. If you have questions about that, talk to us afterwards. But there are a lot of things that people are doing to make sure that they max out their loans.
And just to jump, yeah, it is an interesting question because there's language in the first interim final PPP regulations that says what is a permissible cost under this, and it says payroll cost, and it refers back to section 2F. And 2F defines a lot of those things that we talked about in the employer, what goes into it, wage, some benefits. The throttle back to 100,000 actually happens in 2G, not 2F. So certainly it seems that the public policy would say you need to restrict your pay, but functionally in the regulations, that's not what it says. And so, we anticipate additional guidance coming out. Hopefully they'll clarify some of these things. But at this point, like Rebecca said, we were debating it 3 minutes before we went on.
And there is an FAQ I just kind of want to point out. I don't know the number. Peter's better at that stuff than I am. But I want to say it was in the first one where it was that if you submit applications or you submit forms that later on guidance tells you is incorrect, you are not penalized. You don't need to amend your loan application. You don't need to go ahead and change anything. I know that's for the loan application. Do you know if it's for forgiveness?
I think it was FAQ 14. I think it was in reference to amending the application based on what was out
like
there.
K1, like 1099s and things like that.
Yeah, how you do your calculation. Initially, it was sort of unclear as to what was defined as a retirement benefit, and so you had some people throwing as much stuff in there as they could, and I think that FAQ really
benefits those people.
helps them in that situation.
So the other part of that question is, what happens if I earned income for my practice during that 8-week period? That's fine. So and we discussed this on the April 14th presentation. We didn't discuss it today. You are asserting that you feel that through uncertain economic times that this loan is in good faith. I don't think anyone knows what's going to happen in the next 3 months. Are we back open? Are we not back open? At this point, courts are closed until June 5th. Courts being closed for the summer, I think is going to impact a lot of attorneys and a lot of other, businesses, obviously. So there's nothing that says you can't earn money during this 8-week period.
Just to continue talking about this, they did release some additional FAQs yesterday. Most were related to requirements by the banks, by the lenders. It opened up the secondary market for these loans. But FAQ 31 touched on what
compensation.
What's that?
Compensation.
No, FAQ 31 was about, what does it mean that due to current economic climate that this loan is necessary to ensure ongoing operations. And, it doesn't really define it, but it basically says, hey, we realize that, maybe a Shake Shack returning the funds was a good thing and that Ruth Chris didn't really need this. And so I do really think attorneys that are watching this or other folks you're talking to need to really be thinking through, is this a situation that I really do need this? Is it really necessary to support ongoing operations? There's a safe harbor included in that FAQ 31 that if you had previously received the funds, you can turn them back in by early May, and I think it's May 5th, May 8th, something along those lines. That says, you'll be deemed to have, turned everything back in, and it's a little bit of a safe harbor there. So it's something to keep in mind.
I think my take on that is a little bit different. I think those are for the big companies where they can just issue more stock and raise capital that way. They don't need to be borrowing money from the government. I don't see that as reading, if you are a law firm and you're earning income during this period of time, that you are no longer, that you should be returning your PPP. But
I agree.
Okay.
Yep.
Okay.
Yep.
Very good. Okay.
I just people should know that there's a certification.
Yes.
In the application, and you are certifying to the necessary nature of this loan.
Okay. Next question for Peter. I have several part-time and full-time employees, including myself. For loan forgiveness, I cannot get forgiveness for income in excess of $100,000. Should I adjust my income for 8 weeks to $100,000 or less?
Well, I guess that goes to our previous question. I don't think there's anything in there that says that you have to do that. At least not for what's out there now. So yes, you're throttled back on your loan amount. I don't see anything in the regulations at this point that say that you need to do that for forgiveness purposes or going forward.
And one thing to think about if you've got a lot of part-time employees and you're wanting to increase the amount of time that they work to get more forgiven, then you're totally able to do that. That's allowed. Next question by the same gentleman is, the loan is based on an 8-week period, I assume from funding. Correct. Does all of the money need to be spent within an 8-week period to qualify for loan forgiveness? Also correct. It's a covered period. So you get your money on a Tuesday, your clock is ticking. So one thing to think about as far as like maximizing your forgiveness, say you had a payroll on Friday and you get your loan on Monday, it's like the worst possible timing for this 8-week period. So you want possibly to issue like a special payroll. I don't think you can prepay people. I think that's not allowed. But what you can do is you can issue an irregular pay cycle. You can issue a paycheck out of cycle for monies that have been earned up on that date. So if you've got an extra 6 days of payroll somewhere, you can issue a pay cycle then, at the end of your 8-week period to make sure that you're maximizing your loan in that way.
Yep.
All right. Peter, I'm a single member LLC with employees. I applied during the first round, was approved for a loan, which took into my account my employees' 941s and my draws as the owner, as reported on my Schedule C. As a single member LLC, is there anything specific that I need to do for the forgiveness aspect of the loan?
Well, that really goes to trying to understand what forgiveness is available to you. And you may be in a situation where if the analysis is that forgiveness available to a single member LLC is limited in whole to 850 seconds of your net business income, then you may be in the worst possible situation, right? If you can't get forgiveness for the wages to your employees, and certainly there's a reading of the second interim final regulations that came out that is along those lines. I mean, we were on a call late last night into the early morning, debating some of these issues again this morning, debating some of these issues. So, I guess what I would say is definitely stay tuned. That particular issue is one of the items that, we'll be addressing through this class action suit because, certainly the regulations also suggest that, it works the same, but there's language in there that would suggest that you could be limited to that 850 seconds.
And it's going to also depend on what your income was. You're saying draws, which makes me nervous because you're not talking about net income, you're talking about distributions. And I think that part is clear as far as what you're able to take. I think it's for forgiveness. I think it's 850 seconds of net income. So that might be tricky. If you want to call us offline, we can kind of discuss your specific, facts and circumstances, and how best to kind of go forward. I have friends also that applied before the guidance came out on April 14th that included their draws, but their business actually shows a 0. So the loan is allowed, per the FAQ that Peter described. But as far as forgiveness goes, it's going to be very tricky, I think. And so there's different things that we can do to get you a higher loan eligibility. I think one way is to just elect an S Corp now and put yourself on payroll. But again, for these kinds of in the weeds discussions, we can talk offline, and we're happy to help you with that. There's a question. Did you address the beacon system not up and running? I don't know what that is. Do you know what that is?
I do not.
Okay, we will skip that question. May self-employed apply for grant only? I'm assuming you mean the EIDL. And you may. That's fine. I would
But
encourage you to apply for PPP, but you're going to say sorry. All right, what documents do you provide if you've not found your 2019 returns, Peter?
What documents? So, I mean, if you're self-employed filing on a Schedule C, it's very clear that you have to get your Schedule C for 2019 prepared. You do not have to file your entire tax return, but you do have to have that Schedule C. Additionally, the guidance that came out earlier this week says that applications based on, if you have employees, you need to provide copies of the forms 941, and they're specifically looking at Medicare wages on that to do your calculation. To the extent you are paying, healthcare benefits for employees or contributing to retirement, you're going to need to substantiate those expenses as well in the calculation.
Also, this is what the SBA guidance is saying. This is what Peter and I think. Your bank could be like, and we want to see like a picture of your third born child. Show it to us now. And you're at their mercy. So do what they say to get it processed quickly. Because again, like money's going to go. So even if they're wrong, we'll fix that later. Do whatever they say for right now. If they calculate your loan wrong, that's trickier. If it's not a lot of money, deal with it and move on. If it's a lot of money, then ask to speak to somebody else, see what you can do to get the application approved. You can't file another loan. That's my understanding. So if you filed a loan under the guidance, and you only included like your employees on the first round, but you have this huge, you make $100,000 a year. My understanding is that you can't reapply to get your compensation included. So be mindful of all of that, but also know that the money could go and we don't know if there's going to be more. So you're really going to have to kind of, weigh your pros and cons there. As a self-employed sole proprietor with no employees other than himself or herself eligible for PPP. I hope at this point that question is answered, but just in case, yes, you can. What about retaining part-time employees? Peter understands the FTE better than I do.
Yeah, I mean, so I guess you're asking about FTE. You can certainly grow your business during this time. I mean, it really is going to be that look back. You're either going to be looking back from February 15th of 2019 to June 30th of 2019 and compare that FTE calculation to the 8 weeks following the loan disbursement. Or you have the option of using the first 2 months of 2020. But it's an FTE calc, and it's a very the most basic one, right? This isn't an FTE calc under ACA, Affordable Care Act, or anything like that. This is really just trying to figure out full-time equivalent, and if having part-time help, establishes adds to your FTE, great. That works just fine.
Yeah, anytime you can add somebody right now to work for you, if you've got things for them to do, this would be the time to do it, so you can get more of that loan forgiven. Two-part question. All right. Apply for PPP through Bank of America. Good luck to you after April 3rd, but before April 10th. The April 3rd and April 10th applications different? No. After I applied, communication from Bank of America. I updated my 2019 Schedule C, so did not think I would have to apply as a new self-employed. Do you think this is a problem and should I reapply? Bank of America is like notorious. I don't know if people are reading the news, but it's I don't like disparage anybody, but it's been a bit of a mess. They were sued. That lawsuit was dismissed, but they were sued for priority treatment. At first, they were only allowing you to borrow money if you had a loan with them. So we had clients that had business accounts with Bank of America for 25 years, and they weren't able, they were like shut out of the program. And in the beginning, like Peter said, you could only apply if you had a banking relationship. So these people were really in trouble. So lawsuits are filed. Bank of America was responding. It's obviously a huge bank, and they've got some big clients. So the smaller sole proprietors probably weren't processed as quickly. So I don't think you should reapply because you're in the queue somewhere. But I would possibly look into alternatives and see if maybe one of these companies that Peter was talking about, the financial companies that are doing these now, might be able to process your application sooner, just because, again, this is going to go real fast. And Bank of America might, unless you have a contact there, it's going to be really hard to get in touch with.
The only other thing I'll add is, you know, I've had some experience on these platforms with some other banks. You probably have an opportunity to, and I can't speak to Bank of America. I don't have experience with that, but to the extent you can go and upload additional documentation or, you know, a letter explaining what you think has changed or why it's changed may be appropriate, and try to upload that so that when they get to reviewing your documentation, that's part of the file as well. And so especially if you're trying to increase your loan now, you know, you may have an opportunity to upload additional information. We've done that with some clients where we've gone back in and helped them recalculate because something has changed in the understanding, you know, since the very beginning.
All right, part 2. Peter, last I received an email from BOA. They're asking me to log into BOA. Okay, should I reapply through a different lender? So I think we kind of answered that. I think the big banks are going to be tricky right now. I actually heard amazing things about M&T's portal, that they've like processed 97% of their applications or something, that they figured it out early. Bank of America, Capital One, Wells Fargo. I've heard some not so great things. If you're with those banks, it might be a good idea to give some other banks a call or call your relationship there and see if you can get some answers. Like, just where are you in the queue? That's the most important thing. Because if you are at the bottom of the queue for a big bank like Bank of America, you may be shut out of the program. Next question. Peter, is a cell phone designated for the firm, i.e. not a personal cell phone, considered a utility?
Interesting. It's not one that I have. Cell phone designated for the firm, not a personal cell phone considered a utility. I have not seen guidance as to what qualifies as a utility. This is not one that we have hotly debated, but I can see making a strong argument that a cell phone would be a utility. I mean, keep in mind that the policy behind this entire thing, though, is getting people employed. So the focus here, you've got to be focused on the 75%, on making the payroll costs. And, you know, the 25%, you've got some opportunity there, but the big policy here and what they're looking for is getting people rehired and maintaining the workforce.
Okay. Next question. Someone's asking for the actual guidance from SBA. Yes. We can have somebody send that out to whoever was here if they're really interested in reading it all. Also, just like a plug for the firm marketing, which I'm sure I'm going to get like a lot of gold stars for later. We have a lot of articles on all this stuff. And one of our attorneys used to work at Bloomberg, and she's awesome, Mary Lundison. And she does a really good job of reading the guidance, interpreting it, and kind of pulling out what you need. So if you go onto our website, I think it's like askfrost.com, under the COVID-19 tab, you can see our articles about this guidance, but we can also send out the actual links to the guidance if you want to read it yourself.
And I mean, I think the universe of guidance here is you know, there was an information sheet that came out relatively early, identifying the April 3rd versus the April 10th distinction. There have been 2 interim final sets of regulations that are temporarily changing CFR, I think it's 13 CFR 120. And then there has been FAQs that have come out in 3 different tranches that are, there's 31 FAQs that address this stuff. So that's really the universe. And then of course the CARES Act itself, and then the reauthorization legislation that sounds like the president just signed.
The CARES Act and the guidance, by the way, if you just read the act, some of the things don't necessarily jive. Like in the beginning, we thought you couldn't take your payroll costs at all in forgiveness. You thought we were borrowing gross and forgiving net, because that's the way the act reads. And then the guidance specifically states, nope, it's consistent. You can take employee costs and it's fine. We're like, okay, it's not what it says at all, but sure, we'll do it. So just be mindful there that the guidance and the law aren't always synonymous, at least for us. Okay, submitted my application to a community bank. I did not know to include a Schedule C income. I did not get a loan on that round. In the meantime, I've completed and filed my 2019 return. As to my Schedule C income, do you know if I should amend the application, file a new application, or do something else? If your loan did not get funded, did it get approved by the SBA? I think that's the issue. If it was not approved, I would withdraw and resubmit, including your income, up to $100,000 of net profit.
Yep. I don't know. Yeah, if it wasn't rejected, it's probably still pending, and I think you need to contact them immediately to supplement the file and get that Schedule C in there.
So there's a question. There's a 2-parter on the FTE question. Do you want to start reading that one now? Because you're going to have to answer it.
Oh, okay.
So what happens with mom and pop businesses that are sole proprietors and don't pay salaries, but just take draws as finances permit? Again, it's going to be net income. So if those people, through depreciation and through other accounting mechanisms, get their income down to 0, then their income is 0 and they are not eligible for the program. And then I'll read the question and then Peter's going to go ahead and answer it. So can you please clarify how to calculate FTEs for part-time and or seasonal business? For example, if a client has a retail store where none of the employees work 40 hours, all work 20 hours or less, are the FTEs calculated by total hours worked, then divide by 40 hours? So if a business has 6 employees who all work 20 hours per week, would that equal 3 FTEs?
Yes.
Okay. What happens to employers who had to furlough all of their workers, pay their wages with the PPP, but is still unable to rehire the employees after the 8 weeks? Will the loan be forgiven? I don't know if I necessarily understand the question.
What happens?
You're furloughing your workers, but then you're paying their wages through the PPP. You're fine. You're not required to keep them employed longer than that 8-week period.
Yeah, it's very clear the covered period is 8 weeks. The only other thing I'll say is, so the regs on seasonal businesses are not particularly clear. The CARES Act itself, I think, includes language that says that the administrator is supposed to clarify it. I'm not recalling specific guidance on seasonal businesses, but if it's something you'd like to talk about offline, we can definitely dig in a little bit.
You can definitely call Peter on that one. Thanks. There's an example right underneath. I apologize. So for example, using the employer example above, if the employer uses the PPP money to pay the wages for all 6 employees and those payments constitute 75% or more of the PPP and assume all other obligations of PPP are met, yeah, I think you're fine.
Mm-hmm.
Okay. How are you proposing the program should have been rolled out to not unfairly disadvantage minority and women-owned businesses? We think that the application date should have been the same for both corporations and for sole proprietors and independent contractors, and that banks should have been required to do a first in, first out process rather than favoring people who have larger loans. Like there are certain amounts, the way the government did this so that it would be attractive to banks, and believe me, it's very attractive, is they get a percentage of the loan that's given. So if you're at $300,000, I think that's what like the sweet spot is. At a $300,000 loan, you get a 5% origination fee. So you make more money off a $300,000 loan than you would off a $400,000 loan. And then the origination fees kind of go down after that. After there's something also with like $2 million. I think it goes down to 1% at $2 million, $1. So the banks are looking for certain types of borrowers that's going to maximize their profits. And they're definitely not looking out for the person who's applying for a PPP for $12,642. It just, like, realistically speaking, especially the bigger banks, at least in my opinion, I guess I'm not speaking on behalf of the banks, but it doesn't behoove them to be operating on a first in, first out when they can cherry pick and get the most money they can when the money is finite. Next question. We'll take, if an owner makes more than $100,000, can he pay himself the max of $15K in just 1 or 2 pay periods, or must it be spread over 8 weeks?
I'm speculating here, but I suspect that the practical reality is that when it comes to applying for loan forgiveness after the 8 weeks, you're going to be turning in a 941 or 2, depending on how your 8-week period lands, and as long as you're having payroll costs, I don't think it matters. Now, I guess one thing I will say is it needs to be earned and paid, right? So Rebecca referenced it earlier of not wanting to prepay someone. It's earned, right?
So just so you guys know, the questions that Peter and I are asked, like on a daily basis of like what's allowed, people are really creative. Like creative. Like what's stopping me from getting a W-2 for like my full $1 million and just shutting down the company? There's no personal guarantee. And then we kind of have to like walk these people back of what, is a good idea, even if it doesn't specifically like say no in the law. So we're getting a lot of crazy hypotheticals to try to figure out this like forgiveness aspect. And this is, things we're doing for current clients and obviously for new clients as well, trying to navigate this like brand new area of law that's going to be extinct in about 6 months. So.
And one thing we should say is, and we touched on this during the April 14th presentation, the at least model SBA promissory note that they introduced, and the banks are not required to use the SBA promissory note that came out during the FAQ yesterday, but at least the one that the SBA is promoting requires that you seek loan forgiveness. So part of what you're signing is that you are going to do everything you can to maximize your loan forgiveness, to make sure that you have that 75% payroll cost, so that you can get to the loan forgiveness aspect of it.
And we shared actually a sample promissory note during our last presentation. I'm sure that's available somewhere on MSBA if people are curious and they haven't gotten their promissory note, exactly what you're promising to do throughout all of this. Just to kind of piggyback on my own comments before about the way the program could have acted better so as not to unfairly disadvantage minority women-owned businesses, is also the calculation like we talked about before. If sole proprietors are more proportionately or disproportionately more women and minority owned, and they're not allowed to take their retirement account, they're not allowed to take their retirement contributions, but a non-minority male owns a business and he is allowed because he elected an S-Corp status, that is unfair. So in addition to making sure that the program works for everyone, how the banks kind of process through these applications and kind of, the gateway to the program, making sure that you have access. The other part of it is like making sure you get the same amount. Like there's no reason that Peter should get $3 and I get $2 because he happened to fill out a form that I didn't fill out when we have the same business. We have the same income. We have the same everything else. And I think we have time for one more. Quick comment. Somebody's saying the BOA lawsuit was not dismissed. The TRO is denied, and that is on appeal, and the lawsuit goes on. So I apologize for that error earlier. Looks like there's one question. I filed my tax before all this mess started. I filed as an LLC with the K1 attachment. Should I change it to an S Corp and refile? I guess I'm not understanding that structure. I think maybe calling us after, because I don't think that.
Yeah, one thing that's interesting to note is the 2553s are not being processed at this time as far as making these elections. I think
they're not being processed, but you can still submit it and still go on payroll, I think, because you can make a what's the word, proactive election or something.
Right.
You can still elect for 19, can't you? Through July?
Yeah.
So if this is something you're interested in, call us afterwards and we'll go through it. But yeah, I think you can still do it. I think it's allowed, but I think that's it. I think we're done. Does it, do you have anything else that you want to say?
No, just encourage you to, and I know we said this last time, but it was before guidance came out, but once you're done with this, hang up and call your banker and figure out, if you haven't applied yet, how you can do it as quickly as possible. And again, just keep in mind that the 2019 Schedule C for self-employed is the mission critical document that you have to create.
And apply now.
Yep.
As fast as possible. All right. Well, thank you. We appreciate your time. Hopefully new guidance isn't issued in the next hour where Peter and I have to give another presentation next week. If it is, we will, but hopefully we can kind of go with what we have for a little bit.
Yep.
Okay.
All right. Thank you.
All right. Thank you, Rebecca. Thank you, Peter. Thank everybody for joining us today on this webinar on the new developments with the PPP for the self-employed. The MSBA thanks the tax section and Rebecca Shepard and Peter Hokibo of Frost & Associates for taking the time to put together this presentation. We hope everybody finds these presentations timely and helpful, and the MSBA invites you to submit us any topics that you think need to be covered that we haven't touched on yet. We appreciate your feedback, and with that, we'll close today's program. Take care, everybody, and thank you.